Obviously, large movement from the market. Bitcoin down about 10% just in a few matter of minutes. Bulls generally getting absolutely wrecked on this recent movement to the upside. We're going to break that down. I'm going to talk about that. I want to look at kind of what led up to that, what the markets were looking like, what I was looking at this morning. All right, here we are in the live scene. So I want to start off with something, notable mentions here today. So let's take a look at Twitter. This was posted at 3:33 a.m. This morning, my time. So this is from Hodl Not. I don't usually make predictions, but this is too obvious not to call. We will never see Bitcoin below 10K again, as many individuals will know, is a generally fantastic sell signal. And although this is funny, Hodl Not's kind of become known for this actually. I want to utilize this to illustrate something very important in trading. Whenever you notice the general market or Twitter or Reddit or social media or whatever begin to start clamoring and saying things like, we'll never see price below X, or I wish I had bought more below X, the kind of contrived answer here would be, that's a sign of an imminent reversal. It's not. Certainly there are bullish catalysts and bullish trends. Like, one of the main reasons that trends are profitable to trade and easy to identify is because of the herding effect, right? Individuals pile into the profitable asset that is moving up so that they can get those growth gains. And this is why trends can continue and be exacerbated, is one of the main reasons why. However, what it is an indication of, when you start feeling that froth, when you start seeing that evident sign that individuals are, speaking in FOMO speak, doesn't necessarily mean that the price won't continue to go up or go down, depending on what direction you're trading. It does tell you, it is a warning from the market, it is a gift from the market gods, that right now is a really dangerous time to make trading decisions, right? It's not that you can't be profitable. It's just that, you're operating with a blindfold on, right? This is the reality, right? Emotional discipline and trading psychology, coupled with risk management, are going to be the delineation between long-term profitable traders or long-term unprofitable traders. That's really all that it is, right? Building a technical strategy is something that anybody can do. And it can often seem daunting and overwhelming at first, but it's certainly not once you've spent a few months working on it. And it is very rewarding to build your own system that you can trust and verify, that you build data and statistics on. But the real challenge of trading comes from becoming better at controlling your emotions. And it's not always about control. You can't be perfect all the time. It's becoming aware of your own propensity to make emotional trading decisions, right? Which are usually bad trading decisions, right? So being aware when your subconscious starts to whisper narratives into your mind like, hey man, you should definitely buy more Bitcoin. We're never going lower, man. You're going to miss the train. Whenever you notice your subconscious whispering those sweet nothings into your head during periods of market froth, you will be 10 steps above the next trader if you are just aware of that and generally sit on your hands during that period of time. Choose to do nothing because you may miss out on gains, possibly, but there will always be another trade. And most likely you will sit out a loss, right? And not even a normal loss, like I put on this trade at the stop loss or I got an exit signal. No, like, I put on this trade for no real reason. It sounded right at the time. Now I don't know how to get out. I'm trapped. Oh, what do I do? Sky's falling. You don't want to be that guy. You don't want to be in that position. All right, let's go over to the broader markets. Let's look at the daily. All right. Okay, and just to give you guys an update on what I'm currently doing in the markets. Right. So my initial short that I placed quite a while ago at 9,700 ended up taking profit on that down at 87.35 before price reversed, and the rest of my position, the other back half of my position, was exited at break even. Now, obviously, I took a losing trade. It was closed out yesterday. But I took a losing trade over the evening hours as price moved to the upside and did end up hitting my stop loss. So I chose to do nothing. I chose to stay flat as I woke up this morning and began my scan of the markets. I did not see a setup that I found attractive. I felt very leery about putting on some kind of long position, even though I knew that a lot of people were clamoring for that as price was consolidating. It seemed distributive to me. And I knew that overall, I was likely to look for a long out of this area because my thesis had been invalidated and we've crossed above the baseline. So I have justification technically and fundamentally to look for a long, but the moment didn't feel right. That's obviously why I didn't call for it. And it wasn't my pocket, my window of time to trade in because I trade in a specific time. So I'm currently flat on BTC as we sit right now. Now, I was thinking about this morning. The only potential improvement I could have made on this last trade would have been to set a conditional buy order at the daily baseline, like on or around the daily baseline, maybe at the upper Keltner channel or maybe scaled to trigger should price then kind of trade above the baseline. That would put me into somewhat of a net long position, even though I have short exposure on, and I can accomplish this because I trade on ByBit's USDT perpetual contract. and have a conditional order to set a stop loss at break even should my stop loss on my short trigger, right? This would have the benefit of keeping me flat, so exposing me to less risk, utilizing less margin, paying less fees. And it would not have preserved my capital. It would not have softened the loss in this particular example. But in the event where Bitcoin's price hits your stop loss and continues to move up, you would have significantly dampened the losses or possibly turned the whole series of trades into net profitability. So something to consider. One thing that I potentially could have utilized. It's not, that particular series of trades, kind of like an OCA setup, not something that I normally do because my execution of trades is generally far simpler than that. However, this is a situation where that could have worked out. All right, so yesterday's upside price movement was given back in a matter of minutes earlier this morning. We were coming into this morning. As I came into this morning's trading session, we were, it was right around here when I first woke up and began analyzing the markets. We were consolidating in sideways distributive pattern after having pulled back from I don't want to call it a blow off top, but certainly after the swing high and breaking through resistance. We can see that the ISIS spot did generate a sell signal on that high. And what really captured my eye this morning, as I was looking at the market and looking at this kind of sideways distributive pattern, was, of course, the premium and funding rate on the BitMEX perpetual contract, right? So this kind of yelled distributive behavior to me. Distribution or distributive behavior is obviously what occurs after a markup phase. This is the Wyckoff model of the markets where you have accumulation, markup, distribution, and markdown, right? And there are, it is that simple. There are other aspects of Wyckoff theory, further complications or ways that you can grind down more into it. However, that's fairly simple. Whenever you see, generally the theory here is that those with large positions need to offload those long positions that they accumulated at lower prices onto willing buyers at relative market highs. Otherwise, they're going to incur slippage. They can't just set market sell orders. Now, they can, of course, set limit orders, but that's when you're going to see absorption, right? You're going to see absorption. I talked about absorption the other day. You can generally identify absorption by being at a relative swing high or swing low and seeing lots of wicks in the direction that price was moving, right? So if price has been moving down bearishly and you seem to reach a relative low and then you see lots of wicks to the downside, there's a general price action or market structure indication of absorption, that you have reached a wall, right? I talked about this yesterday. You've reached some wall. These things are obvious. It's not like you hit a wall and for sure, certainly price must move up from here. It's just letting you know what's going on in the background because, of course, there are larger traders or, there's a myriad of individuals with different position sizes that they're putting on with different intentions who are attempting to get filled at that price in that example that I talked about. And conversely, if price is moving to the upside, of course, there are going to be willing sellers or potential sellers that need to unload their long positions for whatever reason. So my first thought looking at this morning was distributive behavior. Now, I didn't take advantage of this. I didn't profit off this movement myself. Like I said, as far as my, first closed Bitcoin trade of June, my first trade was a losing trade, as I just talked about. And the reason why is because as I woke up, I saw that my trade had been stopped out, and I felt that I knew that the best choice to do right now was to not take any trade and to sit on my hands, to wait patiently, to allow price, to allow the chart to reset, to allow my indicators to reset, and to look at the chart in my optimum time of trading and look for my objective signal from my system. I knew that was the absolute best thing to do, although I have been putting on a few more discretionary trades as of late. This was not the time to do so. Shorts were off size last night. Obviously, clearly, we saw about 130 million short liquidations, which obviously was surpassed this morning with long liquidations, but we hadn't seen that many short liquidations since April 11th, when I think we touched 111 million short liquidations. Let's get further into price here as we move further into Tuesday. So as we currently sit on the daily time frame, we are below the baseline. We are below the breaking Bitcoin initiator. Ideally, we need to see price flip and close back up above the baseline at 97.89. The proper move, likely from the daily perspective here, is to be in the mind to look for a short. However, we don't have confirmation of that because Parallax is not confirming with that trade. Minx is also in bullish control zone or bullish territory. Now, again, I'm not in this particular area of the market. I'm not going to be too harsh on anybody with any particular type of directional bias. The market's been quite choppy around this quite historical level of resistance. So fundamentally, I think that it is certainly, you could find good justifications for either fundamental argument that you want to make here. So on one hand, Bitcoin is consolidating at resistance. This is a long-term historical resistance trend line. And look at the macroeconomic factors that are currently happening right now. And we see all of this institutional interest in Bitcoin. We see all of this institutional interest in precious metals like gold and silver, which Bitcoin is more closely correlated with in the traditional equities. So it makes absolute sense to be completely bullish long-term on Bitcoin right now, which I actually am, and to see in that there is less opportunity to play the short-term downside and just look for opportunities to take the long. Therefore, you would be quite bullish, clamoring for a breakout here, saying that, of course, shorts got liquidated and then longs were offside because retail rushed in. So they got liquidated. They got smoked. This isn't long-term distribution. This is a buying opportunity. I can certainly see the logic and the fundamentals in that. I can also see the logic and the fundamentals and like, hey guys, longs are offside. This is a long-term resistance trend line here. Whether you're using long-term resistance trend line or a diagonal or a pattern or whatever you can find, if you're looking for it, you can, of course, find subjective technicals to fit whatever narrative or whatever trade thesis you want to make, which is why I prefer indicators. However, between those two competing narratives, bullish or bearish, have to select, if you're talking about being discretionary here, you have to select the one that makes the most sense in the longest time horizon from a fundamental perspective. And it seems to me, of course, that is the bullish perspective, right? That, of course, I was expecting to see a correction, perhaps down to 7,000. However, the longer play, the better trade here in the long run is to kind of view any price as a buying opportunity between here and there. That's oversimplified, so don't take that as gospel. And look to play the actual breakout in Bitcoin's price action whenever we do end up breaking above the $10,000, $11,000 area. All right, so let's smooth price out with Heikinashi. As we can see with smooth Heikinashi, we do have parallax flipping to the upside. However, even here, we haven't seen the daily price of Bitcoin crack the initiator. Let's actually go ahead and look at spot price for reference purposes. Bitstamp, which we often do for trend analysis. For actual price action, Coinbase is generally a little bit more superior to this, in my personal opinion. But we would want to be seeing, let's look at traditional candlesticks now. We would overall want to be seeing the baseline sitting at 97.92 with the upper channel at 99.05. Ideally, we could see continuation above 97.92 or 99.05. The breaking Bitcoin system, of course, wants to see a daily close back above 10,043, which, if we end up from this correction, rallying all the way back up to 10,043, you'd be pretty hard pressed to find a bearish narrative that makes more sense. Other than that, we don't have a lot from the daily perspective. We don't have a lot of technicals to really talk about today. Nothing has really changed so much. We were back up at the baseline. We are chopping around it slightly. One potential play was, of course, the reversal baseline bounce. I believe if one would have taken that, let's actually take a gander. One would have used this ATR value, 517, about 760. So from here, yeah, if one had taken a reversal baseline bounce short setup from yesterday's movement to the upside, then their stop would have been safely above the high of today's candle because measured from the baseline, yesterday's baseline was, let's actually get the note here. I'll pull up the numbers because I like hard numbers. All right, so your entry would have been, yesterday's baseline closed at 97.88. So it would have been around 97. Yeah, 97.88 is where yesterday's baseline closed. So again, you had your upper channel at 98.92 and your lower channel at 96.83. So again, scaling in between there should have given you an average entry closer to 98.92, potentially 9900 if you scaled larger on the upper side of the range there, which would, utilizing the ATR value of the previous close, because of course you don't want to use the current close, would give you a stop loss distance of $775.50. That's with ATR at default. Therefore, your stop loss would have been safely out of your window, and you would have been looking for a $517 take profit, which you would have hit right around 92.30, and you had a good distance there, even on the Bitstamp chart. Of course, if you were trading on BitMEX, you might have even hit take profit 3, because of course BitMEX went all the way down to 8,600 today, and we'll be covering that here in just a little bit. So the reversal baseline bounce setup was successful. Your stop loss would be at break even right now, and potentially, as I talked about earlier, potentially setting a conditional buy stop to get back into that long position might be justified right around that 97.80 area. So again, the level 2 break still, using any metric, is still that $10,000 area. It's still important to see. It's at that price, 10,043, that we'll see the breaking Bitcoin initiator flip to the long side again. We'll be above the upper channel of the baseline, and we'll be back into trending bullish status. All right, today we are getting the second subsequent no trade signal from the baseline, which is really good. Listen, there is, of course, opportunity to make money from intraday trading. Again, remember that the lower you go in time frames, the higher your propensity to be wrong. So I really like this. I really like this option that I've coded into the baseline indicator. This lets you know when it is just overall dangerous to take a trade. And interestingly enough, the objective results speak for themselves. So we have recently released, well, we've had it for a while, but we recently released the newest version of the Watt-Atar Explosion strategy tester. In the new version, I put in this no trade condition, actually several of them, but this one in particular, as a confirmer, right? As a confirming condition or a strategy tester. Without a doubt, that improves the drawdown, net profitability, and percent profitability of any strategy. It's a very, very, very good confirmation in my opinion. So overall, this is just telling you what you should already know from looking at this chart. Like, man, I just saw shorts get wrecked. I just saw longs get wrecked. Probably not the best place for me to position into a trade. Wait for an objective signal, wait for volatility to die down, and look for a better optimum entry, I think is the best advice that I could give individuals moving forward. All right, and we talked about Parallax, we talked about Watt-Atar Explosion. So let's go look at the lower time frame and see what we got going on here. Cybot did end up triggering a buy in this area. So we're going to see that trade isn't closed yet. We're going to see if that ends up generating an exit signal at a small loss, or if we're actually going to end up getting a rally from here and make money. Looking for a technical term there. All right, no bottom feeder signal on the 4-hour chart. I got a lot of requests for that. No bottom feeder signal. So hold your horses. All right, probably the most instructive chart here for intraday volatility, for what happened today, is of course my preference here, the 45-minute chart, looking at the ByBit perpetual futures contracts. We got the sell signal from the ISIS spot, which generally is designed to target 1% to 2% movements. We can go back and back test this. We get a nice, this one survived. I've already commented about this one. We did get some outsized movement against us, but we did end up, our stop loss was up above that range, getting that 1% to 2% movement out of there, as well as this trade right here, ended up getting that 1% movement right there. This one did end up giving, obviously, far more. And one doesn't have to use it as an initiation for a reversal short. One can obviously use it for what we would generally use indicators like this for, which is a take profit indicator. So again, I just want to comment on this again, because this seemed to be the most kind of glaring thing when I woke up this morning, was what seemed to be distributive price action. Now, after a big rally like that, it's not, you can continue to see rallies continue with, the irrationality of the markets. Quite frankly, completely impossible to predict. Well, when is a large movement going to come in? A lot of traders will present themselves as if there is some magical analysis that they're aware of, or some resource center, or some type of chart, or some indicator, or, some data website, or some, just some metric that lets them know that this is always, you'll see this on Twitter. This is from the hindsight traders, from the LARPers. Like, about 20 to 30 minutes after a big price movement, you'll just see a flurry of tweets that says, well, obviously, if you'd have been looking at this indicator that I've never mentioned before in any of my previous tweets, by the way, you would have clearly seen this coming. I see this all the time. And unfortunately, YouTubers are a lot of my, I don't want to call them colleagues, but a lot of the other individuals that make TA signals, that do TA channels on YouTube are kind of guilty of this as well. There's always kind of a new magical indicator. There's not, guys. There's not. There's not some magical, it's not like, when I'm actually trading, like I'm looking at some different on-chain or off-chain or exchange metrics. Like, no, I look at the same stuff that you see me look at on the stream. I make my decisions based off of the strategy and the methodology that I've, been talking about for years. And it's that simple. I manage my risk and I control my emotions, and I know when to sit on my hands. And I surround myself with good friends, who are there through the good times and through the bad times, because there are good times and bad times. So, and that allows me, again, I'm a little arrogant, because I deserve to be in this, because I have been doing this for years, and I've had people come in and critique my process and tell me that it could be better, and I could do it like this, and I could do it like this, but haven't I heard about this, and haven't they heard about that? There are certainly, in any system, areas for improvement, ways that you can do things differently. I just want to encourage you guys to practice systems trading and risk management, and to work on yourselves as a vehicle, to utilize trading as a vehicle for personal growth and development, because the better you become as a trader, in my life anyways, my experience, the better I've become as a person, because being a profitable trader requires good, vigilant, emotional discipline and self-control, and this translates into the real world. So just kind of backtracking out of that a little bit. This, this sideways price action after a massive rally, and seeing all those short liquidations, and seeing this massive spike on BitMEX funding and premium index. I mean, this is a massive outlier. We just scroll back and see, these. How, this is such an outlier, right? The last time that we saw an outlier even close to this marked a recent market top, and we saw a large correction. That was, of course, back over here on the 19th of May. We ended up selling off from that peak down about 12%. Now we saw the exact same price movement. By the way, I want to point this out right back down to Alex's magical line where he told us all to go long on the retest. I believe that was, gosh, that must have been Thursday or Friday show. That line's still on the chart. But so we don't really have anything on this chart that needs to be filled anymore. All points of control in this range have been tapped. Liquidity has certainly been grabbed and cleared to the long side and the short side now, looking at the range and looking at the number of liquidations. If we did want to zoom out, obviously the next pocket of liquidity that would be the next logical one to be retested would, of course, be the area below our most recent swing low. Down here where we see this absorption, and again, that's around that $7,800. The upper 7,000s, the lower 8,000s, which, as you'll recall, was my original, zone that I was targeting for my second and third set of take profit targets off my initial short. That plan is currently sidelined. I am waiting for an objective signal to go short. Of course, today is generating a no trade condition candle, so I won't be taking any action today as far as swing trading goes, and I will be waiting for a better setup. But just interesting to note. So there's no, I don't see any areas. There's no points of control looking at daily sessions. There's no really significant swing highs or swing lows that are yet to be cracked out, except for, as I said, if we're looking for where the next pool of liquidity is going to be, well, okay, where were longs? What side was positioned more on the last significant movement? The last significant movement was, of course, a movement to the upside that generated here, and really we could measure it back. The more significant movement has been here. This is where longs refilled. This is where longs refilled, and where would their stop losses logically be? Where is going to be a lot of liquidity? Right around this area, right below the recent swing low, because of course, as soon as anybody that positioned here and was holding without a stop loss, once they saw a higher low be generated and saw price come up to test resistance, well, they're going to move their stop loss up, perhaps aggressively. So perhaps they set their stop loss now below their entry, and of course, perhaps now they've actually moved their stop loss up here. Again, likely pockets of liquidity. This is, just logical stop loss placements, which I don't like. Logical stop loss placements are not logical stop loss placements. They're terrible stop loss placements generally. Above swing highs and swing lows are terrible stop loss placements, like always at all times. Like if you ever find yourself taking a trade and then not knowing where to set your stop loss, so you just set it above a swing high or swing low, it's probably going to be a losing trade, man. I'm sorry. Like just, I've done this so many times. A lot of people still do this. I'm not guilty of this myself. Like you've got the chart open and you were on there doing something, and then you just, you're like, I'm just going to take this position, right? You set your stop loss. You naturally do. You will always naturally look to set your stop loss above a swing high or swing low. Just stop. Don't do that, right? Just get out, go to your trading view chart, put on your stop loss measurer, right? Whether that's Quadriga ATR or whatever metric that you utilize, but use the same consistent stop loss distance. Don't let it vary from trade to trade. You're going to have inconsistent results. Now, I saw some that somebody was saying that distribution was occurring at 9,400, not the $10,000 area. They were utilizing this as a data point to build a bearish case. Like spot positions were unloaded at 9,400, and derivatives pushed price up to 10,000. And that is where, longs, leveraged longs were offloaded and leveraged shorts were picked up on. That all sounds good. Like we can see what I would argue was reaccumulation at the $9,400 area and distribution, as I just talked about, at the $10,000 area. So it is very, very difficult, by difficult I mean impossible, to glean out exactly what institutions are doing or where institutional order flow is rising. All you can do, and listen, I respect individuals who make good content on liquidity plays and sweeps and looking at liquidity from the viewpoint of an institution or from a large player, right? Like my friend Bennett over at Bitcoin Trading Challenge has done some good content on this. But it does not give you a magical insight into what they are actually doing in the moment. All you can determine is if something were to happen, where would it likely happen, right? And again, you can generally eyeball that, right? So, it's as much as it's a respectable practice, it's a whole lot of complicated babble to basically say obvious areas on the chart above significant swing highs and swing lows most of the time, right? And you can spot that with your eye. Looking at the CME chart, your perspective, your bias would be bearish, right? We stayed below the daily baseline. We wicked up, potentially. Of course, we had more volatility here on the CME futures. CME futures wicking all the way up to 10,565. And so let's see, Quadriga ATR, and let's measure yesterday's ATR value. Been 556, so 834. You're probably safe. Yeah. Yeah, your stop loss would have been up here around 10,825, which is a nail biter. But of course, because the distance to your stop is wider, your position size will be smaller. Therefore, risk is preserved at whatever distance to stop loss you want to use. That would have been a winning trade. That would have been a successful reversal baseline bounce short setup as well. As we've already come down and hit the qualifying line, which is of course going to be 1 ATR measured from the baseline. So that is always your first take profit on a reversal baseline bounce. So of course that trade was already successful. But yeah, we haven't closed above the baseline. We remain below the baseline. We absolutely rejected after a failed breakout. So after a massive movement like this, again, I want to see some consolidation and take the next significant break is overall my bias looking at the chart. And CME futures tend to agree with that.